In 2019, the IRS quietly removed one of its own educational pages about a tax credit that could put between $750 and $1,125 back into the hands of qualifying seniors every single year. The page vanished from their website without any announcement, without any press release, and without any letter mailed to the millions of Americans over 65 who might have been eligible. If you are living on a Social Security check that averages somewhere around $1,976 a month in 2026, that is nearly an entire extra month of groceries or a quarter of your annual Medicare Part B premiums just sitting there unclaimed. The reason you never heard about this credit is not because it was repealed. It was not repealed. It is still law. It is still in the Internal Revenue Code right now, today, in March of 2026. What happened is simpler and more deliberate than repeal. The IRS stopped talking about it. They removed the plain language explanation from their website. They buried the instructions inside a schedule most tax preparers never pull up unless a client specifically asks for it. And the free filing software the IRS promotes to seniors does not walk you through the eligibility questions. By the end of this, you will know the exact name of this credit, the exact schedule you need to file it, the income thresholds that determine whether you qualify, and the 3 steps to claim it on your 2025 tax return, which you are filing right now during this 2026 filing season. The credit I'm talking about is called the Credit for the Elderly or the Disabled. If that name sounds unfamiliar, you are in the majority. A study published by the Government Accountability Office estimated that roughly 84% of eligible taxpayers do not claim this credit. That is not a typo. More than 8 out of 10 people who legally qualify for this money never receive it. And when you understand how the system was designed around this credit, you will see that the low participation rate is not an accident. The credit for the elderly or the disabled lives in Section 22 of the Internal Revenue Code. It has been part of federal tax law since 1954, 72 years. And yet, if you walked into any IRS taxpayer assistance center today, which is getting harder to do because staffing at those centers has been cut repeatedly, and you asked a representative to help you determine if you qualify, there is a meaningful chance they would not know the eligibility rules off the top of their head. I spent 27 years as a senior field agent. I watched this credit become invisible in real time. It was never a headline credit. It was never the kind of thing politicians mention in campaign speeches. But it was there, and it worked. And for decades, the IRS at least maintained a functional page explaining it. Then in 2019, during a website redesign, the standalone educational page was consolidated into a dense FAQ format that requires you to already know what you are looking for. Think of it like a grocery store that moves the one item you need to aisle 17, top shelf, behind a different product, and then removes the aisle marker. The item is technically still for sale, but the store made a choice about whether they wanted you to find it. Here is how this credit works in plain terms. If you are 65 or older, or if you are permanently and totally disabled, and your income falls below specific thresholds, you can receive a non-refundable credit that reduces your federal tax bill. The maximum base amount for the credit calculation is $5,000 if you are a single filer, age 65 or older, and $7,500 if you're married filing jointly, and both spouses are 65 or older. The credit itself is calculated at 15% of that base amount after certain reductions, which means the maximum credit for a single qualifying senior is $750, and for a qualifying married couple it is $1,125. Those are not hypothetical numbers. Those are the numbers written into the tax code. Now here is where the system pushes people out. To claim this credit, you must file Schedule R with your Form 1040. Schedule R is not included in the standard 1040 instruction booklet that most people receive or download. It is a separate document. The IRS's own free file program, which is the system they direct low-income seniors to use, does not reliably surface Schedule R during the guided interview process. If you use a commercial tax preparation service and your preparer is not specifically trained to screen elderly clients for this credit, it will not appear on your return. The software will not flag it. The preparer will not mention it. You will file your taxes. You will either owe money or receive a small refund, and you will never know that $750 was right there. The income thresholds are where the IRS made this particularly hard to navigate. Your adjusted gross income must be below $17,500 if you're single, or below $25,000 if you're married filing jointly. But here is the part that trips people up. Social Security benefits that are not taxable do not count toward these thresholds in the way most people assume. The calculation requires you to reduce your base amount by the non-taxable portion of your Social Security, and then further reduce it by 1/2 of your adjusted gross income above certain levels. The formula is not intuitive. It was designed by actuaries, not by people who wanted you to understand it. And the IRS worksheet that walks you through it, which lives inside the instructions for Schedule R, is 17 lines long. 17 lines of math for a credit that could be automatically calculated and applied. The IRS knows who is over 65. They know your income. They know your Social Security amount. They could calculate this credit for you and either apply it or send you a notice. They choose not to. Let me tell you about Dolores. Dolores is 71 years old. She lives in Dayton, Ohio. She retired from a school cafeteria at 62 and started drawing Social Security early. Her monthly benefit in 2026 after the 2.5% cost of living adjustment is $1,408. That is $16,896 a year. She has a small pension from the school district of $220 a month. Her total income is about $19,540. She files her taxes every year using a free service at her local library through the VITA program, which stands for Volunteer Income Tax Assistance. She has done this for 9 years. Not once has a volunteer asked her if she has heard of the credit for the elderly or the disabled. Not once has the software flagged Schedule R Dolores' non-taxable Social Security benefits reduce her base amount. But after running the calculation, she would still qualify for a credit of approximately $430 per year. Over 9 years, that is $3,870. Gone. Not because she did anything wrong, not because she was ineligible, because nobody told her, and the system was not built to tell her. Then there is Harold and Vivian. They are 73 and 70, married, living in Tucson, Arizona. Harold receives Social Security of $1,860 a month. Vivian receives $890 on her own record. Together, their annual Social Security income is about $33,000. They also have a small amount of interest income from a certificate of deposit, about $600 a year. Their combined adjusted gross income, including the taxable portion of Social Security, comes in just under $23,000. Because both are 65 or older and filing jointly, their base amount is $7,500. After the required reductions, their credit works out to approximately $680. They have been filing jointly for 11 years since Harold turned 62. They have used the same tax preparer at a national chain for the last 7 of those years. That preparer never mentioned Schedule R. That is $4,760 in credits they were entitled to that simply evaporated. Harold told me he thought the only credits available to people like them were the ones the preparer mentioned. He assumed the professional would know. The professional either did not know or did not look. And then there is Martin. Martin is 68. He lives alone in rural Georgia. He is on SSDI, Social Security Disability Insurance, and has been since he was 59 after a back injury ended his career in warehouse logistics. His monthly SSDI benefit is $1,522. He has no other income. His adjusted gross income is effectively zero because SSDI at that level is not taxable. Martin qualifies for the credit for the elderly or the disabled, not because of his age, which also qualifies him now, but originally because of the disability provision. He has never filed a federal tax return since going on disability because he was told he did not need to, and technically, he does not owe any tax. But here is what nobody told Martin. If he filed a return with Schedule R attached, the credit would calculate against a zero tax liability and would not produce a refund because this is a non-refundable credit. However, and this is critical, if Martin has any withholding from any source or any other refundable credits he may qualify for, filing that return could unlock money he did not know was available. More importantly, having a filed return on record with the IRS creates a paper trail that protects him in ways that not filing does not. The system penalizes invisibility. If you are not in the system, you do not exist to the system. And when programs or benefits require proof of income or proof of filing, Martin has nothing to show. Now, I want you to ask yourself one question, and this is not rhetorical. I want you to actually answer this in your own mind. Have you ever seen Schedule R? Have you ever been asked by a tax preparer, by a software program, or by a Vita volunteer whether you might qualify for the credit for the elderly or the disabled? If the answer is no, then everything I just described applies to you. Here is what was buried. The credit for the elderly or the disabled is described in IRS publication 524. That publication still exists. It is still available on the IRS website as of March 2026. But you have to search for it by number. If you type tax credits for seniors into the IRS website search bar, publication 524 does not appear on the first page of results. I tested this myself. What appears instead are links to the Earned Income Tax Credit, the Child Tax Credit, and the Standard Deduction for Seniors. The credit that exists specifically for elderly taxpayers does not surface when you search for credits for elderly taxpayers. That is not a bug. That is information architecture. Someone decided what goes on the first page and what gets buried on page 3. Schedule R itself, which is the form you attach to your 1040 to claim this credit, has a companion instruction sheet that is 12 pages long. 12 pages for a credit that serves people who are 70 years old and living on $1,400 a month. The instructions reference Section 22 of the Internal Revenue Code, publication 524, and the general instructions for Form 1040. To fully understand your eligibility, you would need to cross-reference 3 separate IRS documents. The average senior who uses Vita or a basic tax preparation service will never be guided to any of them. The Social Security Administration's Program Operations Manual System, known as POM-S, does not reference this credit in its sections on tax implications of benefits. The SSA will tell you whether your benefits are taxable. They will not tell you that your benefit amount and age combination might make you eligible for a separate tax credit. That is technically not their job. But when the IRS also fails to mention it, and the tax preparation software also fails to surface it, and the Vita volunteers are not trained on it, you have a system where no single entity is responsible for telling you, which means nobody tells you. In the current environment, March 2026, the IRS is operating with reduced staffing in its Taxpayer Services Division. The agency has gone through significant restructuring and workforce reductions that began in 2025 and continued into this year. The taxpayer assistance centers that remain open are handling longer wait times with fewer staff. The IRS Direct File System, which the agency has been expanding as a free filing tool, does not currently include Schedule R in its supported forms and schedules for the 2025 tax year filing season. That means even the government's own newest filing tool will not help you claim this credit. You would need to use a full-service tax preparation method or file by paper. Now here is what you do. And I'm going to walk through this step by step because the system was built to make this hard and I'm going to make it simple. Step 1. Determine your age as of December 31st, 2025, because that is the tax year you're filing now. If you were 65 or older on that date, you meet the age requirement. If you were under 65 but permanently and totally disabled with taxable disability income, you may also qualify under the disability provision. Step 2. Determine your filing status and check your adjusted gross income against the thresholds. If you are single, head of household, or qualifying surviving spouse, Your AGI must generally be below $17,500. If you are married filing jointly and both spouses qualify, the AGI threshold is $25,000. These thresholds have not been adjusted for inflation. They have remained the same for years. That is another quiet way the system reduces the number of people who qualify. Inflation pushes income up. The thresholds stay flat. Every year, more people get pushed out. Step 3. Gather your Social Security benefit statement, which is your SSA 109, 9 for 2025. You need the total amount in box 5. You will also need to know how much of your Social Security was non-taxable, because the non-taxable portion reduces your initial base amount on Schedule R. Step 4. Download Schedule R from the IRS website. Go to irs.gov and type Schedule R in the search bar. Also download Publication 524. Read pages 3 through 6 of Publication 524. That section walks through the eligibility criteria and the worksheet. If the math feels overwhelming, that is by design. But the worksheet is mechanical. It is not complicated in concept. It is just tedious. Follow it, line by line. Step 5. If you already filed your 2025 return without Schedule R and you believe you were eligible, you can file an amended return using Form 1040-X. You have 3 years from the original filing deadline to amend. That means for your 2025 taxes, you generally have until April 2029 to file an amendment. But do not wait. File the amendment as soon as possible. The IRS processes amended returns slowly, often taking 16 weeks or more, and in the current staffing environment, it could take longer. Step 6. If you believe you were eligible in prior years and did not claim the credit, you can file amended returns for those years as well, as long as you are within the 3-year window. For tax year 2022, the amendment deadline has already passed in most cases. For tax year 2023, you generally have until April 2027. For tax year 2024, until April 2028. Pull your old returns or request transcripts from the IRS using Form 4506-T and check each year against the eligibility criteria. Step 7. If you use a tax preparer, bring Publication 524 and Schedule R with you to your appointment. Put them on the desk. Ask the preparer directly whether they screened you for this credit. If they say they have never heard of it, you now know more than they do. That is not how this should work, but that is how it works. There is one more thing I want to address because I know some of you are thinking it. You are wondering whether this credit is worth the effort for $400 or $600. And I understand that question. But I want you to reframe it. You paid into the system your entire working life. You funded the IRS. You funded Social Security. You funded Medicare. These programs exist because you paid for them. A credit written into law specifically for people in your age and income bracket is not a gift. It is not a bonus. It is money the government calculated you were owed and then made functionally impossible to claim. $400 is your electric bill for 2 months. $600 is 3 months of supplemental insurance premiums. $750 is a repair you have been putting off because you did not think you could afford it. That money is yours. The IRS did not announce when they removed the educational page about this credit from their website. They did not send a notice to seniors. They did not update the Vita training materials to emphasize it. They simply stopped making it visible. And every year since then, billions of dollars in eligible credits have gone unclaimed. The GAO estimate from the last review put the figure at approximately $1.5 billion per year in unclaimed credit for the elderly or disabled benefits. $1.5 billion every year, sitting in the tax code, legally available, belonging to people who earn less than $25,000 a year, and nobody in the federal government is making any organized effort to tell them. I am telling you now. The credit is in Section 22 of the Internal Revenue Code. The form is Schedule R. The instructions are in Publication 524. The eligibility is based on your age, your disability status, your filing status, and your income. You can calculate it yourself or you can hand your preparer the publication and tell them to calculate it for you. If you were eligible in past years and did not claim it, you can amend. The law allows it. The process exists, the money is there. You were not supposed to find this. That is why you are finding it from me and not from the IRS. That is how it has always worked. The code does not hide itself. People hide it, and then they count on you not looking. Today, you looked. Now do something with what you found. Pull up irs.gov. Search for Schedule R. Search for Publication 524. Check your eligibility. File the form. If you already filed for 2025, file the amendment. Do it this week. Do not wait for someone in the system to tell you it is time. They had 72 years to tell you. They chose not to, so you are telling yourself. And that is the only version of this that has ever actually worked.